Hello, everyone, and welcome to the Nvidia earnings watch party, where we will be watching to see the earnings drop, which I think is going to be about 20 minutes after the hour. And we'll see if Nvidia amazes us again with incredible earnings and the stock either rallies or it drops. I am joined by Daryl. How you doing, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
It is great to be here. And do you happen to know what is the expectation on the earnings? Is there like is it I forgot the term you used, but it could go up or down by a certain percentage.
The implied move,
Yeah.
it's 6.2%.
That's a pretty good little move. Yeah. So with an implied move of that type, we're expecting some news to hit. Looks like the market closed, and we are going towards NVIDIA dropping the information. What I'll do is I'll kind of go over what's expected out there. We've got 38 analysts on stock analysis putting in their price targets as well as some of their research. And they think it's discounted. The stock is discounted by 30%, which is a pretty healthy discount considering the company's like a $4.7 trillion market cap company. And the earnings that we're dealing with here is the one that finished January 31st, 2026. Revenue growth is expected to be around 71%, which is really incredible considering how big they are. And the profit's supposed to grow by 73%. Two very incredible growth rates on the quarter. They're going to guide, and the guidance will, determine if the stock's going to really go up or down. And I just can't imagine why they would guide down because the data center companies, the big guys, AWS and Azure and Google Cloud, they're all saying, well, we're going to spend lots of money. So I expect that I'm probably going to say that the current fiscal year is going to be a good one. And we'll see how that plays out. Over the long haul, I'm expecting at some point they're going to contract a little bit on revenue because semiconductor historically has been a cyclical industry, although this AI build out is huge. I mean, it's the biggest build out that I've observed since the internet. And here's where we're at. So it'll be exciting to see how they announce their earnings. Right now, I think the market's just kind of holding its breath, just a little bit of selling, but not much in after hours. So I'll kick it over to you, Daryl. I think you had a couple of slides that you wanted to share.
Yeah. So, according to What If, they're supposed to report about 20 minutes after the hour. According to Seeking Alpha, they're expected to report 66 billion, have an EPS of 154. The implied move is 6.2%. They only have about 1% short interest. I grabbed some valuation growth and profitability metrics from Seeking Alpha. Nvidia has a forward PE of 40.8 times compared to the sector median at 22.06 times. They are, as Victor showed us, they're expected to grow their revenue by 75.5% next year compared to the sector median at 9.8. Their EPS growth is 82% compared to the sector median at 15.22. And their profitability, they're at 53% on their net margin. That's for the past year, where the sector is 5.4 median. So they are priced higher than the sector overall, but these numbers just blow the sector kind of out of the water.
Yep.
So, what does NVIDIA do? In case you don't know, they are the AI brain designer. They're the designer of the graphical processing units that the AI build out is using. What a lot of people may not know is they also provide a software ecosystem called CUDA. And that really has what we could call a lock-in effect, because almost all the AI developers around the world use that to write code for the hardware. And once you get kind of used to a software platform, it's hard to pry developers away from that unless somebody creates something so much better that you just can't resist moving off. And they also have end-to-end AI factories, so they don't just sell GPUs, they actually build supercomputing systems with network hardware and the software stacks for data centers. So they're involved in that as well. They're really the undisputed leader in the semiconductor and AI infrastructure industry. Their products include the Blackwell and the Rubin GPUs, Mellanox networking gear, and the CUDA software platform. They do have some competitors in AMD and Intel, and Alphabet and Google are also, have their own internal silicon projects to build their own chips. So they do have some competitors in that space, and that's something we'll have to keep an eye on. Even when they report today, let's take a look at those margins and make sure their margins aren't being eroded.
Mm-hmm.
So in Q3 of their fiscal year, they reported revenue of 57 billion. That was up 62% year over year. They did have a 73.6 gross margin, so that's something we'll want to watch today.
Mm-hmm.
Their competitive mode is that triple threat. They have hands down probably the best chip architecture around. They have the massive CUDA software ecosystem, and they've been able to release products about on a 1 year cycle. And while they're not a biotech company, their hardware is powering the world's leading drug discovery and genomic research platforms. Do you have a question or a comment?
No, I was just going
Okay.
to say, it's like a perfect storm for Nvidia. They were the right company at the right time with the right chipset, and that's what we find ourselves with.
Yep. They're also in the sovereign AI and agentic AI. There are countries like South Korea and UK that are building national AI clouds, and the shift toward agentic AI, which is basically AI that can act autonomously, is driving a new wave of the compute demand. And that's the topic that we're always hearing about, especially over the last few weeks, but it's been around for a few years. The catalyst for today, we'll want to listen for any guidance about their Rubin chip ramp up and the hyperscaler capex. So Victor mentioned the huge amount of capex that's being spent this year. It's about 600 billion across Amazon, Google, and Meta. So that's a lot of money, and we want to hear about, how they're able to fulfill that demand. And, they just have this massive earnings growth, both on the revenue and the EPS. They still have about 62.2 billion remaining in their share back authorization as of the end of 2025. So today's their earnings. That's going to be a market mover. Yesterday, you may have heard that AMD inked a contract with Meta to provide GPUs for Meta, and AMD rose on that news. But basically, to me, what that signals is that there is still a lot of demand for AI chips. Whether Meta is trying to move away from them I'm talking about Nvidia as a single source, or whether the demand is so great that it just can't be fulfilled with one vendor. That's something we'll have to determine. And in addition to that, Meta had already signed a contract with Nvidia for millions of Blackwell and Rubin GPUs for their infrastructure. So Meta has AMD and Meta fulfilling that. We also got a lot of price targets, and we'll look at those in just a second in a little bit more detail. But the price targets are basically 245 plus. In January, they had the CES 2026, where they unveiled Rubin, the architecture, the Vera CPUs, the Alpha Mayo platform for autonomous driving. I haven't heard much about that in the news, but I did hear it was released. And then the U.S. government reportedly approved limited sales of the H200 AI chips to selected Chinese customers. That was back in December. And then I saw a news blip today that they haven't actually shipped any of those. That was a report from the government. So we'll see what NVIDIA has to say about that. Insiders have predominantly been selling, and usually that would be a point of concern. But I think with a company like this, where they've rewarded so many of their employees with stock options, and we don't hear about every stock option that gets sold. It's only these big guys that have to put together a plan and release a plan ahead of time. But there has been more insider selling, but it really doesn't surprise me too much with a company like this, the way that they reward their employees. As far as institutions, they own about 65 and a third percent. There are some growth funds that have reduced their stake in NVIDIA, but there are some large passive indexers like Vanguard and BlackRock. So every time somebody puts $1 into the SPY, 40 cents of that goes to NVIDIA. Vanguard is the same way with their QQQ and whatever else funds these guys produce that track these indexes. Every dollar that comes in, a huge chunk of it goes to NVIDIA. So we have the earnings today. That's going to be a big one. We'll want to look for the Blackwell production yields and the Rubin shipping timelines. We'll want to watch out for those margins. And we do know that their options market is priced an implied move of 6.2%. They also have the GTC conference coming up in mid-March, and that's always typically a buy the news event where new partnerships in agentic AI and physical robotics are announced. Then we can take a look at some of these analyst ratings. So Cantor Fitzgerald put out a $300, these were all in February, put out a $300 price target and has a rating of overweight. Bank of America is at 275 with a buy rating. Goldman Sachs is a 250 with a buy rating. Morgan Stanley's 250 with an overweight. UBS is 245 with a buy rating. And Daryl Pendergrass has a 220 with a buy rating as well. You didn't see that on the chart, though.
Thanks, Daryl. So I completed a valuation using the app that I created on rationalstocks.com. Kind of take you through the valuation. Free cash, right? It's grown really fast, and I think it's going to grow over the next 4 years by 30%, which is a real fast growth rate. It's a lot of growth. I'm going to give them a very desirable discount rate of 7.5%. and a terminal growth rate of 4%. And I can't get to the stock price. Based on that criteria, the stock is priced 9.36 too high. And if we look at the earnings per share and value it based on earnings per share, that's going to grow really nicely. I'm going to have a 35% growth rate. And PE, forward PE in 4 years, 25. And a discount rate of 7.5%. I get to a discount of 27%, which is close to where analysts are with the stock. So overall, Nvidia is fairly priced. The way I view Nvidia is you either want to have it or you don't. I mean, all the massive gains are behind us. Now it's about, do you want access to the most advanced semiconductor company in the world or not? And a lot of people have bought in recently. Some people have sold. If you look at the last year, and I'll let you handle the charts, but the stock hasn't moved a ton since July of 25. The big move was coming out of that tariff-induced sell-off. But maybe we're going to see the next, the next pitch higher after this earnings. I don't know. We'll see what we're dealing with in about 5 minutes. Along those lines, so let me show some additional analysts out there. We've got a lot of analysts that are obviously putting their 2 cents on Nvidia. And how many was it? 31, 38. So 38 analysts. And on average, they think, the stock could be priced higher. I can't argue with that. It could go higher. This is a really important company. It is big and it's really valuable. 4.76 trillion. So if it went up 30%, geez, that's more than $1 trillion in market cap. That's a lot. Forward P of 26.98. So that looks good. I don't know if you want to look at the charts while we wait for the earnings to drop.
Yeah, we can look at the previous breakouts. So this is going back to July, and we could go back even further, and you'd see that Nvidia pretty much just kind of traded sideways. But this is when I picked up my shares, and the basic reason that I picked these up, just so you know, I'm a retired investor. I've been living off my portfolio for the last 5 years. So Nvidia is typically not a company that I would own because they pay a dividend yield of 0.02%. So that's really hard to live on unless you have millions of shares. So anyway, but I had some young folks that I was working and talking with, and they were saying Nvidia's at all-time highs. I'm afraid to buy it. So I said, as long as you put good risk management control in place and it goes south on you, you get out, wait for a better opportunity, you can buy these even at all-time highs. I bought just for a teaching experience. And we had this big breakout. So we went from a level of 40 to an average level of 85. And once they reached that level, they basically consolidated again from February of 2024 until May of 2024. So 3 months. Broke out again. Went from the level of 85 up to, I'd say on average, probably 125. They traveled sideways again. I could probably pull this box back even to right there and would be okay. But we had some volatility here, a little bit of a breakout, then a little bit of a sell off. So we settled in there around 125, 130. Then we broke out again. And now we're sitting at 177 during this consolidation period. We bottomed out in September, maxed out in October, have sold off because of the fears about overspending in AI, and that could hurt Nvidia if some of these hyperscalers start pulling back on their capex. So once we got there, we've pretty much just been trading sideways. So that gives you kind of a big picture of, these breakouts and, using risk management to get in. So my cost basis is only about $80, but I bought at an all-time high. So you don't necessarily need to be afraid of buying at all-time highs.
Yeah, good point. Very good. Yeah, some stocks, they go up, they hit their all-time high, but you can't kind of penalize a stock for doing well. If they're doing well, they're doing well. And
Exactly.
it's not the reason to sell a stock unless you think, hey, this stock has fundamentals that can't support that particular price level. Okay,
Yep.
I can understand that decision.
Yep.
All right, so we're getting near. Oh, we're at the 20 minutes after the hour. So let's take a look and see if we have the earnings in hand.
I don't see that they've reported yet.
Yeah, I'm not seeing it yet, but it should be dropping any second because we're now 21 minutes after the hour. So let's see what's going to happen here. Let me know if you see them drop. I'm not seeing them drop. And anybody in the chat, if you guys see them drop, please let us know.
Yeah, I'm not seeing them just yet. I'm not seeing a lot of.
It's interesting that usually, like, the company's website isn't the first one to post the earnings. Usually, some other outlet. Oh, hey, we got Nvidia earnings, and then a couple minutes later, it shows up on their website.
Right. Yeah, it seems like for the past since September, basically, we've been trading in this range. We had the high in October the 29th at $212, and that's become a line of resistance there. And then this lower line, which I have colored in green, I set back on the 17th of September, and it's been tested intraday 1, 2, 3 times. Here it was a couple percent off of it. So that does seem to be a pretty good support level, but it's really struggled to get back up to this October 29th level, since these announcements of the capex and worries about overspending.
There were moments when the stock was discounted nicely in the last 6 months,
Yep.
last 4 months. So I was able to pick up some shares during those low points.
So the RSI moving into the earnings, they have had 3 solid days of above average volume. One was average volume. The RSI is above the 50 line, approaching 60, currently sitting at 61. And we have been on a buy signal on the PPO probably since about the 18th of February. We've been on a little bit of distribution since the October 29th peak, but I've noticed over the last week and a half that we are starting to get a bit of accumulation once more. And money flow has moved from bullish or bearish to back to the neutral zone at the moment.
It was a good day today, nice green day. A lot of stocks went higher, and technology specifically had a really good day. So
Yep.
we'll see if they can hold it and we could rally into tomorrow.
I still don't see that they've been
Yeah, I'm on their
picked up by
website.
seeking alpha.
Probably yeah, thanks, Dominic. Doesn't look like they've dropped. I'm sure there's like a million people doing the same thing I'm doing, is clicking refresh on their website.
Yep,
Hey, drop
exactly.
the earnings. We want to see them. All right, so they will drop in a few minutes. In the meantime, I'm going to cover just real quickly Nvidia. I like to put companies in a category of green is super desirable. They've got a really strong moat. They are very profitable. They're growing really well. I mean, Nvidia gets 100 out of 100 score, where competition can't really compete against them. They don't have the same technology and performance. Everybody wants Nvidia, so their network power is really powerful. Their balance sheet's exceptional. Revenue growth, we've never seen this. I've never seen this. Profitability really high and free cash flow is really high. So 100 out of 100. Other companies, I mean, Salesforce is going to announce today. I think they already announced. And these guys have a good report card. This would get you through the school year with a passing grade. But it's a 58, and it's a great score, meaning these guys in particular, they have a pretty strong moat. I think their network effect is pretty strong, but they're not growing all that fast. And their profitability could be a little better, their net profit. So, having said that, Nvidia is one of one. You know, nobody can match their technology. Super desirable. So, I'd be willing to pay close to fair value if I wanted to own it. I'm not looking for a steep discount because everybody wants Nvidia. Whereas a great company, I'm looking for the right time to buy at a really good discount and trying to make money on that stock just based on a mispricing situation. So let me take a peek at their website. Nothing yet. Looks like they're going to make us wait. And I guess we're going to wait.
Yeah, I don't see any huge movements in the after hours. So I suspect they haven't been released yet, or they would be moving around quite a bit.
You know how like the earnings drop and like literally a second later the stock moves so much? I mean, what is going on? Do like big hedge funds have these supercomputers that are immediately like processing what was said in that statement and making a buy or
Exactly.
sell order?
That's exactly what happens.
Man, amazing. So yeah, no move yet. So I don't think they've dropped. So I noticed today that I think Bitcoin had a good day. I know Nvidia's GPUs were used for Bitcoin mining um, a while ago, but I know Coinbase was up and Bitcoin pricing was higher. Yeah, it was up nicely, 7.73. So the market going up higher, was it the economic news that drove the stock market higher, or what do you think was behind it?
Oh, it's hard to tell what the market's doing. One day they're defensive and the next day they're back on offense. So to me, it's just kind of hard to tell what's going through everybody's minds.
Yeah, I agree with you that especially like in some spaces like software, like a day or two ago, I mean, it's sold off like nobody wanted to own that space. And then today it rallied. It's like,
Yeah, there was a
interesting.
report released over the weekend about the future, like 2028, what could happen with AI. and that really spooked a lot of people. And then I think probably after you sit and digest that and realize that is a future estimate of what could happen, they probably backed off a little bit. I can't remember
Right.
the name of the company that put that out, but they're not very well known, but they did put out a pretty well thought out piece about what could happen with AI.
And the piece around AI, right? Because I hear the theories that, well, it could really replace people, especially white collar people, people that have, kind of intellectual jobs, I'm going to say. But then I hear the employment reports, and I'm not seeing an employment issue. I'm not seeing like big job losses. I'm seeing more like, subtle changes in the
Yep.
employment data. So
Yep.
I'm not sure if I believe the AI disruption stories. I think those could definitely get a lot of eyeballs to the media outlets that want to put that out there because, of course, viewers are going to tune in if they're like, hey, everybody's losing their job. Hey, everybody wants to tune in to see if they're going to lose their job.
Right. Exactly.
Yeah. Hey, it looks like we have somebody from India.
Yep.
Yeah, Roundbee. So if you want to look me up, obviously you can get to my YouTube channel. And you can also go to rationalstocks.com. And Daryl, if you want to put up your details,
Sure. I'll post them.
you can visit my website. You can see the kind of research that I do, the kind of tools that I provide. And of course, you can tune into my YouTube channel. I create videos and obviously live stream. Well, they're going to make us wait.
Well, they sure are.
I'm all dressed up with nowhere to go. This is my dressed up t-shirt. Yeah, speaking of today, right? We had the semiconductor space do quite well. Microsoft did well today. The software space did quite well. Financials, and I'm not sure why earlier this week, this was pretty red. And it caught me by surprise. I'm like, why is that red? I couldn't put my finger on it. I think some of it was explainable that, hey, there's some maybe credit concerns, but I'm like, well, how's that going to affect Visa, MasterCard? So it was a surprise, but it looks like it bounced back. And like Citi, right? What does it have to do with the financing that data centers are, needing? I don't think Citi's involved in much of that. So it was kind of a weird situation. And today it was risk on because some of these safe sectors like consumer staples was down, good part of healthcare was down, energy was down, materials were down, real estate was down, industrials were down. So
Utilities seem to be up, though. That was kind of interesting.
hmm,
Where's your heat map on the
down
utility?
here,
Yeah, you can see some
yeah, a little
green
bit.
in there. Yeah, the
All right.
utility that I own. Okay,
Sorry, Daryl. I'm going to
they
interrupt you
did
because I think
report.
they just reported. So
Yep.
because their stock went up, so they probably reported their numbers. Do you have like a headline information on your side?
I haven't got it yet, but I will keep looking. It usually takes a few seconds. They are up to $200 a share.
So
There they go. I have it now.
you do?
Yep. So they
All right.
beat by 8 on their earnings, and they beat by 1.9 billion on the revenue. They're expecting full year revenue to be 215.9. That's up 65%. He uses those words exponentially. Agentic AI has arrived. Grace Blackwell.
So 65%. Now, you had that number quoted, right? That was the number that was expected, right?
65%.
In your slides, I think you had a 65% expectation, growth
Yep,
expectation.
let me look at it again real quick. This is for the full next year.
That's next year, but this year.
That's next year. They were up 62% year over year last year.
Mm-hmm.
So, okay.
Gross margins were higher. I got their slides. Let's go through those real quick.
All right, go ahead.
All right, so the revenue is higher. That 65%, I think, is in line with what everybody expected. Of course, they're selling into the data center, getting into networking. Gross margins expanded.
Oh, that's good news.
That is good news.
That's very good news.
Operating expenses were higher, which is not good, but gross margins were higher. Earnings per share looks good. Free cash flow in the quarter, 34.9. That's just for the quarter, huh? Wow, that's a lot of cash. So in the fourth quarter, 68.1. For the quarter, 73% growth. And they expanded margins by 2 points, 200 basis points. Impressive. Looks good.
That had been declining for 3 quarters, so it's really good to see that number go back up. It's hard to recover that. Once you start losing it, it's hard to get that back.
Yep. All right. Looks good. Let's see if I can get a hold of their. Nope, still not there.
Yeah, we can jump into the press release on my side here.
All right.
And we'll get down to the tables. What do you want to see first, Victor?
Try to get to their annual cash flow, like for the full year. There we go. So that's their income statement. Okay, so 120 billion from operations, and how much was the capex line? If you can go down a little bit. Yeah, go down a little bit more. Okay, right there. So they spent 5, so they went 115 billion in free cash flow.
Oh my gosh.
Yeah, that's something to write home about.
Yeah, exactly.
I think mom would be proud of that. Of course, she'd be proud of anything. Oh man, that's a big number. All right, so that changes things a bit. All right, so I'm going to update my valuation. I've got a spreadsheet with the financial calcs to value a company based on free cash flows. And I just put in that fresh number. And I had the growth rate of 35%. Let's revisit the forecast just to see if I'm still comfortable with those numbers. Forecasted, Nvidia is supposed to, we just finished this year. And we are now operating in the year that'll finish at the beginning of 27, 54% growth, 27, 11. And then we'll go to 22. So I think a happy number would be, I'm going to say 30% growth would be a good number. And then 20% there. Yeah, so the earnings per share expected in this year that we just started, $7.87. So there's a discount. I think the quarter was pretty darn incredible. So I think they deserve to rally higher. It still has a discount, even though they've been rallying higher as of late. I think in the 5-day, it's up 4% over the last month. Not much. Year to date, up about 5%. So it's up 3.7 or so as I speak. That's a good earnings overall.
Yep.
Yeah. And I mean, the market's been a tricky one here in 2026. We've had some stock sectors that have sold off pretty harshly, safe sectors rallying higher, and a couple pockets of rallying stocks. So there's probably some money on the sidelines that's available to be invested. And maybe that's the money coming into the stock. But Nvidia looks good. It looks really, really good. The financials look good. It's priced well. And this will, it's when the stock is going to get really uncomfortable is if they stop growing, because then
exactly
all bets are off.
Yep.
On this valuation, I'm saying it's worth $6.2 trillion. It's a big number. So that's a lot of investing to take it from 4.7 to 6.2. That's a lot of capital going in. So congratulations, Nvidia, on the good earnings. Everybody's buying those GPUs up. They're doing well, expanding their margins. Looks good. Anything else on your side on Nvidia before we talk about Salesforce?
Nope. Let's go.
All right, let's talk about Salesforce. So this is all the good news. Enjoy it. Let it soak in. Because if you're a Salesforce stockholder, this is where we're going to kind of grin our teeth and go, what the heck? The bleeding continues. These guys did not outperform that revenue number. And they almost are feeding this narrative that, hey, AI could make SaaS companies less important, less profitable, more competition, lower moats. Just there's a cycle of concern and fear that is in the software stocks, and Salesforce just didn't kind of blow it out of the water. They didn't outperform the number, period. They needed to do better. You always can tell, like, if a company's trying to hide something, they start with something else. Yeah. Hey, you don't really care about obligations. So let me start with obligations. Yeah, we don't care about that. We want to see their revenue growth. So they put it way down here. Oh, okay. For the fourth quarter, we grew at 12%. But if you look at constant currency, 10%. And for the full year, they grew at 10% and constant currency at 9%. So those are decent numbers, but they really needed to help themselves and come in with like a 12. If they had to come in with a 12 and then guided higher, we'd be off to the races. Here's another thing that I think they're feeding this AI is going to replace you narrative. They're going to rebuy stock, right? I get that they're doing that. I kind of wish they wouldn't have announced it because it's a sign of weakness. Okay. We know the stock's super low, so we're going to buy it up. We're trying to get you distracted from this line. So this is a problem. This is a problem for Salesforce. I don't think the stock's going to move for the quarter. It's a miss on the top line, and that is a giant problem. All right. The free cash flow number was good. Let's see here, guidance. So revenue growth, all right, they're putting themselves out there. They're going to try to grow at 12 to 13%. Full year, grow 10 to 11%. That would be a good number. If they can grow at 12%, then the stock will work. If they underperform that number, I don't know. The stock is really discounted, but it's the sell-off has been so intense in software stocks that it's beginning to make me feel like, what am I not seeing? What am I not understanding about software stocks? Why is the market just completely throwing them away? Like they're pretty much undesirable. So let's take a look at my valuation. Let's see if they gave me some financials here to work with. I think they did. So we went over revenues. We're good there. Balance sheet. So cash. So the cash didn't come in a little higher, quite a bit higher, $2 billion higher than last year. So that's about 14% higher. CapEx, not a lot of CapEx. Surprised. I would think that they're building out their data center because Salesforce, if I'm not mistaken, they don't use like a public cloud. I think they host their own SaaS, but maybe I'm wrong. Maybe they do host somewhere. So that's a pretty strong free cash flow number. It looks like it's going to be 14.4 billion. Okay. Is pretty conservative there. Sometimes my Google lookups don't want to fire, so I have to refresh it. They still don't want to fire. What's going on here? All right. So what are analysts saying? So analysts are saying heavy discount. And I agree, but I also know that they just didn't do enough to get this stock to really start to take off. So it might be that this stock is just going to hang around for a quarter. It might catch a little bit of a rally, but what can make the stock go higher? They had their opportunity to put some news on the table that would really change everybody's expectation, and I don't think they did enough. You want to show the charts on CRM?
Yeah, so last time we looked at this, we went back a few years and I put these auto support resistance lines on here and I haven't touched them since. But basically what they are there for is I try to find a location where we see a lot of price activity right along that point, and that's why I put that line there. And then when it broke down below that point, we added this other line. Just where is the next level of support? And I basically put it at the peak here in October of 2022, as close to this as I could. And it found a little bit of support here. So that's it. That's at 5 years. And the reason I went back 5 years is to show everyone why those two lines are there. And the last time we looked at this, they had broken down below this one. So we went and looked at this one. And at that point, I thought that CRM will be here before too much longer. And we're going to have to see how they trade over the next quarter. But I'm beginning to increase my probability that they're going to be at this point before we see any more highs.
Painful. Man, that is brutal.
And we've got a lot of things pointing to support.
So let me stop you there, and let's go back to a conversation we had a minute ago, which was you coached some investors that, hey, even though Nvidia had reached an all-time high, it's not a reason not to buy it because it could continue to go higher. On the opposite end, just because Salesforce is on a low, it doesn't mean it can't continue to go lower. It's
exactly
the same rationale, by the way.
Exactly. So, I wouldn't touch this with a 10-foot pole until we start seeing some reversal in these trends. So let me explain why I think it can get to here. And it's the same explanation that I gave before, but we probably have viewers that probably hasn't seen our videos before. We have a 200-day that's declining. That's 200 days worth of data. Okay, we did peak out in the 23rd of July, and it started decreasing. That puts you into a confirmed downtrend. We had already drawn these to at least this red line, I think. No, we didn't do that until about here. When it crossed this point, we put that line in place. So they moved above that, but they broke down below and just haven't looked back really. We have a 50-day that's declining. We have a 50-day that's below the 200-day. We have a 21-day that's declining that's below the 50-day that's below the 200-day. 4, 5 signals right now that's telling you this thing is not going back up for a while. We have a RSI that has been sitting in oversold territory since the 13th of January. So I don't know how I'm going to do this because I have to work my mouse at the same time. We have a PPO that went sell around the 9th of January. It's been in bearish territory since. So what are we up to? 7?
Yep.
We've been under distribution for 2 months, month and a week, 5 weeks. We did get a little bit of accumulation, it looks like today. There were some people that were optimistic and drove the price up on above average volume. But I think tomorrow that's probably going to totally reverse. And we also have money flow that's been negative, meaning people are moving out of the stock, except for a few spurts of activity. There's been a lot of distribution. This accumulation line here has been pretty much flat. We got a burst of energy here, a drop, another burst of energy, and then a decline. So there's been more signals than not saying this thing is not working.
Yeah, and I agree with you that the stock is likely not going to work. It's very discounted if you look at the cash flows that this business has. But let me just say that I could show you 100 stocks that have good cash flows, but if that top line isn't doing the right thing, top line of the income statement is revenue. Revenue tells us our customers buying more of the product, are they paying a higher price? Is Salesforce out out competing its competitors? And right now, it's okay, but they needed to come in with better than okay. They needed to come in and interrupt the whole narrative that's been established on their stock, which is AI is going to hurt you. AI is going to take something from you. We don't know if it's going to take a little bit away from you or a lot. But for now, CRM is going to be guilty until proven innocent. It's not fair, but it's stock investing. That's just the way that I see it. It's a value stock, but there's a lot of value stocks that'll take your capital, sit on it for a while, maybe even go down in price on you. And I need to be careful with software stocks at this time. I like software stocks. It's right at the center of my circle of competence. I've worked at software companies for 30 plus years. I've worked with Salesforce stock. I've worked with these products, understand the customer base, all those things. But at this point, I'm not going to buy more shares. I'm just going to sit out the quarter and just wait on the stock and see what's going to happen next. So that is Salesforce. A little bit of tough medicine, and boy, investors are having to take tough medicine. The stock is down 4.62%. Speaking of tough medicine, I think this one might have been like instead of medicine, you needed like, what do they call those paddles when somebody's heart stops?
Yeah, defibrillator.
Yeah, they have to like put the paddles on the chest like 3-4 times to get a pulse. Oddity is kind of a consumer tech company, and it's kind of it's a small cap, very small. It became a lot smaller today. These small caps, I know that when they work, they're magical because they can really reward us, but they're riskier, much riskier, especially in like an oddity. It doesn't quite have a category to fit into as a technology company. I believe their company's about providing a platform that people can go, or I imagine mostly ladies, and they get a digital definition of their skin tone and features and stuff. And then companies could then sell to, hey, based on your skin complexion, I've got the right makeup for you and this, that, and the other. So it's a unique proposition to the market. Well, something happened that caused the stock to sell off by 49%. Let's see what that something looks like. Over the 5 years, not a pretty picture. This is going to be a beyond rated R. This is rated R 25 or older to watch. 65% down over 1 year. Brutal. Really low PE. Remember how we said, cash flows could be found in some stocks, but this particular stock has been punishing investors. There's growth there. How is that possible? Growth. What the heck? I expected a negative number there. So free cash flow went negative. Okay. What's the story on this stock? Why is it selling off?
Had something to do with ads.
They had like false ads of some sort?
No, the way that Meta changed their ad platform hurt Oddity in some way, where they got their ad cost went way up.
Okay.
So that ate into their profits.
So this thing's discounted by 278%. Okay, so when I look at the quarterly here, The quarter that was just announced is this quarter.
Yeah.
They came in at that number. And this is where the profit is dropping. So this is what you're referring to. But for Pete's sake, the stock dropped that much. They're still growing the top line. These small caps. This one's getting just murdered. And it might be that they're in a category that investors are feeling like the same fear that investors are feeling around CRM or Monday.com or Intuit. It's kind of spilling over to companies like this where it's like, well, we don't know what AI is going to do to these guys. So I'm going to sit this one out. I want to get out of it. They're looking for any good reason to get out. And I think if their cost did go up substantially, that was a good reason. That's not a make-believe reason. Just I'm looking at the quarterly income statement. Let's kind of go down this really quick. So the gross profit looks fine. The operating expenses did go up. They went up about 20, call it 23 and some change million. The revenue held about the same growth rate. So that isn't too bad. Okay. So their net income did come down a little bit. Free cash flow did contract. Their gross margins are okay. I'm just not seeing a big giant problem here. I think a 50% drop. I'm expecting like a smoking gun. I'm expecting something to show me, oh, here's a big giant problem. So net income was lower. They are building up inventory. So this right here, when you see this I'm looking at the statement of cash flows. When you build up inventory, you're taking your money and you're putting it into a product and it's sitting on the shelf. And when you see 2 consecutive quarters, that's bad. Inventory is building up. Why are you building up inventory? Either you're really terrible at forecasting your supply chain or what's going on. This is okay. And this was like an accounting change that they had. Looks like they had, and maybe the accounting is being questioned here because you shouldn't have these big, like, this is kind of a paper, I think it was a paper gain on net operating assets. So that gets taken away from the statement of cash flows because they benefited from it on their income statement. So again, I'm not seeing a big giant problem, although this inventory is a negative. This is a red flag. Why are you building up so much inventory? Overall, I think this sell-off is overdone. Because I think the numbers are still pretty decent, but I go back to be careful with small caps because they could do this. And then a small cap like this, we could wake up 6 months later and it's up 100%. And you're like, geez, these things are going to drive me crazy. So
that would get you back to where they were yesterday.
Exactly. Any comments on oddity that you want to make?
Okay, so we're looking at the chart since their inception. We have the out of support resistance line that had been tested 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times, 11 times. They did really shoot up and get above that price level. But when they broke down below it, that's always kind of a warning signal. So I'll start my warning count here. The 200 days declining. So they were in a confirmed downtrend. They broke down below that line. The 50-day crossed below the 200-day. Warning sign. Oops, I didn't mean to do that. 50-day is declining and below the 200. The 21-day is declining and below the 50. And the 5-day had been increasing, but it's decreasing now, and it's below the 21. So, wow, monster volume today.
Oh
20,
man,
23 million shares, and they normally trade on average 1.4 million.
jeez.
So that was huge. Let's go in. One of the things I'm really starting to focus on is the volume, because it can really teach us a lot. And the more I'm learning about it, the more it teaches us. So I don't know if I'm going to be able to get much out of that at the moment, but the RSI is in overbought territory. It can stay that way for a long time. So this was almost 6 weeks that it was oversold. I think I said overbought, I meant oversold. So it's oversold now, but it could stay that way for a while. We've been on a sell signal since about the 22nd of December, but we've been in bearish territory since the 4th of August. So when it's below the center line, you're in bearish territory. So you got to be kind of careful. And it's been in distribution since it peaked out in August. It's been in distribution ever since. So nobody's been wanting this. And if we look at the money flow, that is what accumulation and distribution is based off of. It's been basically negative since the 1st of October. And if you exclude this 1 month here, it goes clear back to the 25th of June, where it really moved from a positive into a negative territory. So this has been sending some warning signals for several months, and it finally happened.
Yep. The stock is discounted. You know, I hit it with a discount rate of 12%, which is much higher than a discount rate that we just saw for like Nvidia at 7.5. And looking at their trailing 12 months free cash flow, I'm going to just take the trailing 12 months, by the way, and just keeping that straight. It's still discounted. This is just the stock price has gotten so low. They're well below their cash value, their net present value of cash. But this isn't going to change all that easy. I mean, you don't have a 50% sell off day without keeping investors spooked about buying your stock. This one, it would be untouchable for me. It's just, it's got radiation on it. I don't want to touch it. Maybe in a year or 2 years, if these guys survive and grow, they'll prove everybody wrong. But for now, I would stay away from it.
Yeah, when you're down 50%, it has to go up 100% to even recover.
To get back to even.
Yep.
Perfect. All right, so we knocked out Nvidia. It's giving up a little bit of that momentum. It's 2% higher. The CEO right now is speaking to analysts and investors. Now it's beginning to rally a little bit. You know, so look at that. And then CRM is in the hurt locker, down 5%. All right, guys. So we covered the 3 stocks we planned on doing. While you guys are tuned in, I wanted to just tell you about my website, and then Daryl could tell you about his channel. He's got a wealth of knowledge. I encourage you to visit his channel and subscribe to his channel as well. So I created this website. I can continue to build on it. I'm going to be tracking super investor portfolios, trying to learn from super investors and seeing, you know, what are they buying? What are they holding? How could I learn from it and become a better investor myself? And then within the member content and tools, you go into a different section of the website. Really speaks to my methodology of investing. This is all free to look at and watch those videos. And it explains my methodology in its entirety. I'm creating, before I get to that, you can also track the contest we're having, like with the channel. And it looks like I think it was that material stock was in number one place. Genetic Smite, look at that, 90%. We're not even through 2 months. Good for him. I have my blog going. This is daily updated, so you can take a look at my blog. I'm posting on stocks and I'm analyzing each day, as well as some interesting stories that come out. Moving along, I have valuation tools, and you'd have to become a member here. You get the first month for free. And if you don't like what you're seeing, no problem. You don't have to pay anything, so you could have the first month for free. And I have valuation tools. I think I showed that earlier. You can value based on free cash flows and on earnings per share. These have been pretty accurate. I've created these on my own and really put all the logic that I use on that Google Sheet into these apps. So you get to work with these. If you go in and get signed up, you can self-register and get all over it. I also have the company moat information, a member calendar for advanced members, and then some charts that I put up there as well. So take a look at my website. I'd really appreciate that. And I'd appreciate you considering Daryl's channel as well. Over to you, Daryl.
Yeah, so today I put out an earnings preview for Nvidia. And then these other videos I do on a weekly basis. I take a look at all the charts for my holdings and what I'm seeing in those charts, and explain any decisions that I'm making about either adding to positions or trimming them based on technical. Everything's fundamental based, but I'm using technicals to make decisions on where I trim and add. So you can either get to the YouTube through this name here, or you can scan that QR code.
Perfect. Thank you, sir. All right. So we had another watch party and really fun exercise. Thanks, Daryl, for everything you do. And thanks, everybody, for tuning in. I really appreciate it. And we'll see if Nvidia can hold their stock price. I think they will. I think it's a solid business. Tomorrow, we have more companies that are going to announce. I'm looking at Intuit tomorrow. That should be an interesting stock to take a look at tomorrow. I'll create a video for members on Intuit, as well as some others are announcing. And then I don't know that Friday has much going on. Next week, we finally get a little bit of a break.
Finally.
I think earnings season is beginning to wind down. Nvidia being the biggest stock of them all, it's pretty much after this week. We'll have a couple stocks here or there announce, but it won't be the volume we've been dealing with for about 6 weeks, about 5 weeks.
Yep.
So it's been a marathon, and we try to cover as much as we can. All right, guys. Well, good luck with your stocks. Thanks for tuning in, and we'll catch you on the next live stream.
Thank you all.